Hello and welcome again to Charles Kelly Money Tips. I had a bit of a technical hitch there. Welcome to Money Tips. This is Charles Kelly bringing you money tips to help you save, earn, invest, accumulate and enjoy more money. Now, as I mentioned before, I was a financial advisor going back many years to the 80s, going back as far as the 80s, the 1980s, where I worked for insurance companies, I worked for banks, I worked for myself as an IFA, an independent financial advisor, and that's why I wrote the book about money, Yes, Money Can Buy You Happiness. And I've seen markets go up and down over the years. I was working in the city when we had the Big Bang and then the 1987 crash, which was, I think, something like 30% down in a day, and markets took a long time to recover from that. So I've seen some ups and downs, and what we've seen over the last week is not quite as bad as that, but it's getting towards that. Markets have literally plunged around the world, and in fact US trading in shares was briefly suspended after sharp falls. So the falls were going down so fast that they just said, right, hold on, let's call it a halt here. Trading was suspended for 15 minutes, albeit, but once trading resumed, the market's indexes fell further, down 6%, and it's really savage out there today. And the UK down is also down as well. FT 100 index down 6%. I think the Dow Jones index at the moment is down about 7%. Excuse me. Now, you might say, oh, 6%, 3%, what's all that? But that represents billions of pounds and billions of dollars per percentage drop in the market. And if you think today, the market has fallen below 6,000, the FT 100 index. That's the index of the 100 largest companies in the UK. It's called the FTSE, FT Stock Exchange 100 Index, commonly known as the FTSE. And these are the biggest companies in the UK that are traded anyway. And it's down to 5965. That's less than 6,000. You might say, so what? Well, just a month ago, it was at 7,500. That's a 20% drop, which is like a crash to me. It's certainly more than the correction. And in fact, if you look back, to when it was 6,000, because I'm thinking 6,000, I remember it's 6,000 years ago. And in fact, I've looked up this and it was 6,000 in 1999. Yeah, 1999. So 20 years ago, it was 6,000. Even at 2007, before that crash, it was 6,400. And so that's a huge drop, isn't it? And all right, the companies that are quoted now are not the same companies that are quoted in 1999. But you've got to look at, a lot of people are relying on this market, these companies, to build their pension. So a lot of people have got their livelihoods tied up in these stock markets, which are not performing very well. So that represents a huge drop by anybody's standard. It's if it happened in one day, I suppose you'd call a 20% drop like a crash. Maybe 30% might be considered a crash, but it's certainly 20% just in the last month or so. And it did. Markets went down and we say it's caused by this coronavirus, but that's part of it. But I think it's created a sort of lack of confidence in the market that has just panicked everybody. And also we've seen that the Dow Jones going down from 25,000 to 23,000 something. I mean, that's a huge drop. And we've seen oil prices plunge as well, partly due to a sort of a bit of a war going on between the Saudi-led OPEC members and the Russian-led group. Saudi wanted to cut production to force prices up, but the Russians wouldn't agree to it, perhaps because they can't afford to lose production. A lot of their economy depends on oil production, as many countries do. If they don't pump out this oil, their economies are in trouble. So that's caused a big problem. Some of the oil shares have fallen again. We see shares in companies like BP and Shell dropping like a stone, really. 15%. Shell and BP were down as much as 15%. Premier Oil, a company, saw its shares more than halve in value. Frankfurt market, 12% down. Paris, 10% down. Russian ruble fell 8%. I suppose that doesn't mean a lot to anybody, but it's probably tied up with the oil price. We've seen all the Dow Jones down 7%, NASDAQ, which is the sort of high-tech shares, fell 11%, Tesla fell 10%, oil firms, Apache and Marathon on the 500 index dropping 40%, and the oil price has dropped 30% to $31 on Monday, the biggest single-day fall since the start of the Gulf War in 1991. The leading fund manager, Justin Urquhart Stewart, said, he's Seven Fund Management, investors are selling stocks at such a rate that they cannot quantify what Saudi Arabia and Russia might do, he said. He said people are nervous. You could say that again, Justin. People are nervous. So what should you do? I don't think the average person can do a lot about this. What can you do unless you hold a lot of money personally in shares? Most people would probably hold money in funds like unit trusts, pension funds, investment trusts, drawdown schemes, and they are really kind of stuck because there's not much they can do. If everyone tried to draw the money out of a fund in one go, the fund would probably have to suspend withdrawals. So I think for most people, they're going to have to ride this one out. Although had you got out of the market earlier, you wouldn't have to ride it out. But once the shares have fallen, if the shares you're holding or the fund you're holding has already fallen by 10 or 15%, there's not much point in selling. Although you need to take your own financial advice. Because I'm not your financial advisor. This is here for sort of entertainment purposes. Although I don't suppose today you're going to find this very entertaining. But it's really been bad out there. The coronavirus continues to sort of scare people around the world and grow. Although Britain has only got 3 cases. I say only. It's obviously tragic. Every death is a tragedy, but it's hardly where you would consider epidemic proportions. It has jumped. It's up to a couple of hundred confirmed cases now. But compared to say flu, which kills thousands of people every year, and compared to a population of 60 million, that's not very many. And hopefully, there has been some announcements of some vaccines announced around the world. So hopefully things will settle down. One would hope things would settle down and people will get back to normal and markets will get back to normal, because it does affect things. The market will affect your pension. It's not just about, these rich people in the city are going to lose money. It affects the whole of the economy. And even the companies you're working for, these companies like AstraZeneca, Associated British Food, Ashtead, 3i Group, BAE, British Aerospace. British Aerospace are down. Day change, they're down 7%. They're down. Barclays Bank 9%. Barrett Developments 8% down. These companies employ probably most of the people in the UK. So if these shares are going down, that means the company has got less money in the kitty to invest. The confidence is not there. They can't borrow as much money. They're also vulnerable to takeovers. So this means that it ultimately affects jobs, because they can't then go out and invest in things that will produce more jobs. So it's kind of affected. All you look at is a sea of red. When you look at the numbers, you can look them up yourself. Royal Dutch Shell now down 18%. That's a huge drop. They're a multi-billion-pound company, but it's a huge drop by anybody's standard. Rolls-Royce are down. So there you go. There's not much more I can say about it. You've just got to sort of ride it out. Property-wise, a lot of my listeners and a lot of my viewers are invested in property. I'm a property investor as well. That's not going to be immediately affected, but the property is not immune to the movements in the economy. So if people are nervous about the economy, they're nervous about the stock market, it creates a nervousness in people wanting to invest and buy property. So property is a bit slower to move than shares. Obviously, shares instantly move up and down. Property can lag behind that. But we'll have to see what happens. Hopefully, the Chancellor's budget this Wednesday will bring in some announcement that can help the UK economy, and we are expecting an interest rate cut of maybe between 1.25%. That's been predicted, so we'll have to see if that helps things. Another significant first today was the fact that UK government bonds, the yield on them went so low that it briefly went into negative, which would be, I believe, a disaster for the economy, but it came back again. But that is bad. That means if you put your money into UK government bonds, you would be losing money. You'd be getting back less than you put in. It would be costing you money to keep your money there. So that's how worried people are. So anyway, that's all I can say. Thanks for listening. Hopefully I'll have better news for you tomorrow. But until then, bye for now. This is Charles Kelly bringing you money tips to help you save, earn, invest, accumulate and enjoy more money. Thanks a lot.